Hi, my name is Darren Joseph from HTJ.tax. We're the team that seeks to demystify this sometimes confusing world of international tax and the privilege of having a deep conversation with Mark. Mark, can you please introduce yourself?
I'm Mark Morris. I'm based in Switzerland. I've been here for about 26 years. I've specialized in automatic exchange of information, which originally was the EU Commission's EU Savings Tax Directive. And that went on until about 2014, and they scrapped that and they adopted the OECD's FATCA made into CRS.
So can you share with us what it is you do professionally?
Primarily, I provide custodial services for trusts to hold underlying entities or partnerships or unincorporated funds. So what I do is I provide the administration services for the custodial. I don't do the actual custody. And later on, I'll explain what administration services for custodial is. And I'm an expert in CRS and CARF, and I certainly know the intricate differences between CARF and CRS. We'll get into that in a later question, okay? I've published over 600 articles on LinkedIn, and I'm still writing about 10 a week. And I don't see other people covering 99% of the topics on CRS that I cover.
Okay, thank you. Can you talk to us about the MDR, the mandatory disclosure?
I kind of laugh against the MDR because, as you know, I write articles on, most of my articles is how you can avoid CRS. If there's a loophole that's legal, I write about it. Why should I not?
Yeah.
It's there, it's a weakness. If they want to tackle it, then they must tackle it. Otherwise, it's a loophole. So I wrote about loopholes for the English non-doms. If they want to avoid this new inheritance tax, then put this in the trust. And a lot of UK lawyers, not a lot, several wrote comments on my website. So what about MDR? And there's a fine of $5,000 a day if you don't disclose. And so let me tell you about MDR. First of all, besides the EU, there's less than 10 countries that have implemented MDR. I think it's only 3 countries. Some said they would, but they didn't. A lot, Israel, Switzerland, Brazil, they all said MDR is not, although it's a BEPS action, 2 things. It's not mandatory, it's not prescriptive, it's not a minimum, so we don't have to do it. And the Swiss wrote a letter, the state secretary, saying, this is not mandatory for us to do it, and we're not going to do it. Other countries like Liechtenstein said, if there's so few countries doing it, why should we? So now, that's one thing. Very few countries do MDR. I don't think Singapore does it, or Hong Kong. The other aspect, and this is the biggest weakness of MDR, you must report for MDR. It's not the financial institution. It's different. It's the intermediary that designs it or is offering this. Now, but only if the intermediary is resident in the country that has implemented MDR. So I'm in Switzerland. I can fly in, I can email, I can do whatever I want, saying as avoidance, and no one's going to report to me. So then the next thing is MDR says lawyers are exempt from being reported. Because of legal privilege. Now, some people took the European Court of Justice to saying that, no, you must make lawyers report, and they just lost the case. That was as recently as May. I think it was an opinion that was made by the court. Legal privilege will remain for lawyers. So again, lawyers can say this intermediary approached us and you should use it, because that's the way it works. The lawyer will learn about it from the intermediary who's not reportable, and now the lawyer is not reportable. So what do the brilliant people at OECD say? Who's responsible for reporting then? And believe this or not, it's the person using the avoidance scheme that must report on himself. Yes, that is very funny. That's how desperate they are. And if you don't, we're going to fine you. Well, these people that are using avoidance are really scared of the fines. There's nobody to report. So it's the toothless wonder of the 21st century.